I didn't know that the Fed's inflation or government's inflation calculator could go as high as 5%. I thought they usually tamp it down before it gets there. But as someone who's running a silver company, I'm curious what went through your mind as you see this. And, I know bankers don't really have to think steps ahead, but since you're running a company and you're seeing the cost of the goods and commodities that you need go up in price, which affects a profit margin. And perhaps you could dig in and walk through from your perspective how this would affect silver and the silver mining companies. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, covering the silver world in today's hyperinflationary environment. And fortunate to be joined today by John Miniotis of Abra Silver, which is going to be fun because yesterday we had this, really benign 5% CPI inflation print. And I was thinking about, all right, it's one thing to hear inflation up, inflation down. These things get tossed around and, the Fed's dismissing it and, it's transitory and all that. Yet, well, it's easy for bankers and CNBC to say these things. They actually do have real world implications. And I thought today would be a good day to actually walk through how that would affect a mining company, how that would affect the silver price, because they are connected. So, John, it's great to catch up with you. It's been fun getting to know you over the last couple of weeks, and nice to have you on here as one of the people who is going to be counted on to bring silver to the world. So before we dig in, most importantly, how is everything going today with you, my friend?
Everything's going very well. Thanks for having me on your show, Chris. It's my pleasure. I've been following your shows as well, and you're doing a great job. So I'm honored to be on your program here.
Well, that's kind of you to say that. I appreciate that. And it's kind of fun. I mean, not kind of fun. It's a blast that it's like the opposite of working on Wall Street, where you can actually speak about something you enjoy, share the truth, help people, and go home and enjoy the rest of the day. So go figure. But let's dig in, because I was stunned yesterday when I saw, and I'll pull up the article, we got this inflation number, which kind of grew throughout the last few weeks. Last month was 4.2%. And then I saw a week ago, the expected number was 4.5, jumped to 4.7. I didn't know that the Fed's inflation or government's inflation calculator could go as high as 5%. I thought they usually tamp it down before it gets there. But as someone who's running a silver company, I'm curious what went through your mind as you see this. And, I know bankers don't really have to think steps ahead, but since you're running a company and you're seeing the cost of the goods and commodities that you need go up in price, which affects a profit margin. And perhaps you could dig in and walk through from your perspective how this would affect silver and the silver mining companies.
For sure. No, that sounds great. So I'd say, yeah, overall, I mean, I saw the headline number as well. And to be honest, I mean, it's not a huge surprise. I think for many of us, the writing's been on the wall for quite some time now, that higher inflation's on the horizon. The figures printed yesterday, of course, confirm that, and really now over the past few months. So we're seeing that finally come to fruition. And when you, I guess, take a step back, I mean, we know big picture wise, the economy is debt dependent. And so global debt continues to expand at a rising rate. Productivity is kind of stagnating. And so the result's stagflation, I think, right? Which is really rising prices combined with low to falling economic growth, I guess. And so, we're seeing, of course, rising prices everywhere across the board. And I think, really, as central bankers continue to print globally, it's just going to continue to accelerate that trend and make things worse. And that's really why, I mean, at the end of the day, why investors are flocking to hold real tangible assets like gold and silver, as an example. I think at the end of the day, that's what really all you can do to kind of protect your wealth against the debasement of currencies. So as we see, real interest rates continue to fall. So I think right now, the 10-year, 10-year treasuries are about 1.5%. And so, CPI 5%, that's negative real interest rates of 3.5% per year. So if you hold the 10-year government bond, 10 years out, I mean, you just lost 30% of your purchase, 35% of your purchasing power. So, a lot of that money is going to be leaving the fixed income space and finding new homes. And I think gold and silver are, proven stores of wealth. And we'll continue to benefit as we see real rates continue to fall here. And they're already quite negative. But, the trajectory is for that to continue. I don't see that reversing anytime soon. So overall, I mean, this is positive for silver. But yeah, near term, we know, better than anyone. Silver price moves quite oddly at stages. I mean, you'd expect gold prices to be at all-time highs, right now, just given where we're at. But of course, I mean, well, gold's pretty close to all-time highs. Silver still has a long way to go. So I think silver has a lot of catching up to do eventually, and this is definitely positive for silver prices in particular.
Yeah, well, it took about not a couple minutes to look from the chart, more like a couple of seconds, because on that number, silver actually sold off drastically before rebounding, which is most likely the result of natural free market trading that the CFTC and the MRAC policy tamps down and advocates. But you're planning for a business. You have employees, you have obligations, you have shareholders, you have stakeholders. So part of running it, I would imagine, is that you got to look at all these things that are happening and figure out, how do I plan going forward? Now, given that, Janet Yellen, who I thought was the Fed chairwoman, now she's Treasury Secretary, hard to keep all these straight. But she's saying that, we're spending at like 2010 levels, like this is your granddaddy's stimulus package, as if implying that we're still not printing enough. I keep hearing this statistic: 40% of the dollars in existence were printed within the last year. So it seems hard to imagine this turning around. I'm seeing the prices of all commodities skyrocketing, although as we see here, despite 4.2% inflation last month and then 5% this month, which I might add, these are year over year calculations. So, which I believe the whole point of doing that is that it strips out the volatile food and energy prices that they talk about, which are only volatile in one direction, at least from my charts. But it says the Federal Reserve has been largely dismissive of the numbers. So they don't see. John, would you have thought you could get a 5% inflation print? Like, I would have thought that would be the level where finally the Fed would take notice. Are you taking notice, or should we listen to the Fed? What would you say there?
Yeah, no. So I think, look, I mean, I think we all know actual inflation has been higher for a long time now. But yeah, no, it's finally the actual reported CPI figures are playing catch up as well. But we know, I think, based on the 1980s CPI measures, I mean, inflation's been running closer to 10%. And there's been a big disconnect. I mean, real assets, real estate, I mean, land, whatever, obviously equity prices, et cetera, have all been running far beyond that for several years. But yeah, I think real inflation is clearly here, has been here for several years, and especially, really accelerating the prices of lately commodities, all types of commodities, anything that can't be printed has been running pretty hot here. So it's been a matter of, when was the CPI actually going to start reflecting that? I think we're starting to see that now for the past few months. I guess might not be long before they make some more adjustments to the CPI figure, maybe try to tamp that down. Because yeah, I mean, the other alternative is they raise rates, and then that's not going to bode well for the economy as a whole. That's, right now they're still stimulating and printing money, and continuing to suppress the long-term yields. And so, yeah, I think higher inflation's here to stay, and that results again in looking for investors looking to store their wealth in real assets that can't be printed. And so, long term, for sure, that's definitely a positive. I mean, that's been the thesis for a lot of commodity investors for many years, and it's finally it's here now.
Now, John, while I will give you bonus extra credit points for working in the phrase "tamp down" into your answer there, again, I could be wrong. You might be right. That's why I'm asking. I'm always trying to learn. And plus, I will be honest. I went to Wharton's business school, so I could be still a little bit demented with the Keynesian jargon they teach there. But going back to the Fed's article here, it says central bank officials believe the current rise is due to temporary factors that will abate as the year goes on and look higher because of comparisons to the year ago period when much of the economic activity remained restricted due to pandemic precautions. Um, so, John, I think that's a question a lot of people have. You're not an academic banker with a track record of just ripping off your constituents. You actually run a company, so it's a different perspective. But for people not sure what to believe, should they listen to the same central bank that said subprime was contained right as their constituents got destroyed by believing that? Or should or I don't know, would they more wise serve? You could be talking your book, you never know. You do have shareholders to answer to and a lot of legal requirements if you were lying. So what would you say to people who are seeing the two options and don't know what to choose?
Yeah, I think the answer is quite obvious there. So yeah, no, it's quite a rhetorical question. But yeah, I mean, what else is the Fed going to say, right? Otherwise, clearly they have pressure to raise
I mean,
rates.
they could tell the
Um,
truth. That is possible. Or is that like the steam just starts smoking out of the head and it's not possible? I
sure,
don't know.
sure. They could tell the truth and do the right thing, and yeah, return interest rates back to 5% and see what happens to the economy. Unfortunately, it seems that's they're definitely stuck between a rock and a hard place. So they could tamper. This could be temporary inflation, raise rates, and I'm sure deflationary pressures will come back pretty quickly. But is that what they're going to do, or are they just going to continue to do what they've been doing for many years now, and just continue to print cash and artificially keep rates low, keep the market going? Obviously, the market's at all-time highs, etc. And see how long this lasts. Ultimately, I think it can't possibly last forever. These rates, especially, I mean, things are going parabolic now. So nobody knows how long it'll last, but ultimately, I think investors have to do what's right for them. You can take their word, you can go buy 10-year treasuries and see how that fares out for you, or you can diversify your money and go get away from fiat currencies into hard assets. And hard assets are currently at record highs pretty much across the board, except for silver. Silver's still a 50% discount to its all-time high. So I think silver fares, to benefit very significantly here. And I think whether you buy physical silver or buy a company that's exploring or producing silver, obviously that's up to depending on your own personal risk tolerance. But certainly companies like us, like Abra Silver, exploring for silver. We're planning, like you said, we're running a company here. We're planning for silver prices out 4 years or so, which is when the project would be, we expect to be producing, likely sometime in 2024. And so, the long-term horizon, long-term outlook for silver looks very, very positive. And so, there's a clear path for us to unlock value for our shareholders here.
Yeah, and another factor adding to that is that if the cost of your inputs are rising, with all else being equal, that would have a negative impact on a profit margin of any silver company, right? So as the profit goes down, that would seemingly lead to less supply coming off the market because there's less economic incentive to do so. So when you filter these things through, which obviously the investment banks and the Fed doesn't know how to do, which is why, that's what I appreciate you being here to do. What is is that going to, the way things are going, is that going to bring more silver online or less?
Correct. Yeah, no, that's an excellent point. So for marginal silver producers, having higher costs, having higher fuel costs, higher labor costs, all of that clearly could make their project uneconomic. And so eventually, I mean, if you're running a business at a loss for a long period of time, of course, there's going to come a time where you're going to close the mine and just say, well, we'll just shut down production instead of continue to operate at a loss. So that would definitely result in lower supply, even lower supply than what we have today. But that would really impact somebody sort of in the highest cost quartile. So thankfully for us, I mean, our project, of course, not producing today. It's a development project, but the cash cost, because our grades are so high and the ore body's close to surface, quite cheap to mine and sort of turn into silver and gold doré. Our cash costs are $7.50 an ounce of silver, and so we already have a high profit margin in there. Of course, if inflation creeps that up, we'd still be producing, or we're scheduled to produce down the road at very good margins. And so some projects would go forward regardless, but certainly if you're a high cost operation, having higher input costs could clearly result in lower supply, or higher silver prices, of course, would be needed to offset that and keep those operations open.
Yeah, and then here's the other thing I think about when I wonder, is the Fed going to be right about this inflation being transitory? Because Janet Yellen runs her mouth about higher interest rates all the time, which, yes, would be great if you had a real economy. But as I'm sure you remember, because I'm sure your shareholders were talking about it and you're hearing plenty, back in 2018, after 9 years when the Fed made a token gesture of actually tightening rather than talking about tightening to twist perception. See, if you keep putting those headlines out there and you lie, like Janet Yellen often does, until people forget the next day. But there, when they actually made a token, they got interest rates up to 250 basis points after a decade. And you saw the whole stock market collapse at the end of 2018, which could be a random coincidence, but I'm wondering, maybe it's going to be hard for them to ever raise interest rates because now you have more debt, you have bigger bubbles. And so they can talk about raising interest rates and try and do Wall Street's only trick, which is to lie, get people to be confused, make bad decisions, stop them out of their trades by spoofing the markets. But it seems hard to me. I can't figure out a way that the Fed ever raises interest rates, even a 1%, under this current monetary system. It seems to me like we're at the end of the road and there is not this easy magic potion that they claim to have to slip on out of this one.
Yeah, I agree with you 100%. I mean, I've given that quite a lot of thought. I don't think it's just a matter of incompetence or that they want to lie. I just really think there's no way out for the Fed. And so what do, right? If you're the Fed chairman, what do? Do you raise rates and go back and, or do you say inflation's here to stay and 10-year yields are likely going to go above 5%? And then your government that's been dependent on, printing and stimulating the economy is not going to be able to afford sort of the interest payments. I mean, there really is no way out. Unfortunately, it seems that debt levels are just so high across the board, and that eventually fiat currencies are just going to be debased. And that's why, as an investor, I mean, you can only do what's right for you and kind of find ways to protect yourself and protect your wealth, just given the situation we're in, right? Like, this is just a reality. And so if you're holding cash in the bank, or if you're buying a 10-year bond and you lose 35% of your purchasing price or purchasing power after, I mean, you're going to look for alternatives. And that's why we're seeing prices continue to increase for real assets. But yeah, silver is pretty unique given that it's nowhere near its all-time high. And so silver is sort of represents a incredible risk reward opportunity in my mind here.
Yeah, especially because, John, what I find, most of the world doesn't get silver. They think it's some weird fetish or whatever, and that's fine. Although, in my experience, which I guess is now 20 years, Wall Street and beyond, so maybe I still, I'm young and gonna still learn, keep trying to learn, piece it together. But I just find it hard to see how do you put this back together. I mean, it just seems like it's at the end of the road, and especially because the people that actually understand the Fed, especially in the last decade now that have been studying silver, most people don't have any idea what's going on with the Fed, as we've seen by the CNBC headlines where they still believe the Fed's, oh, this is transitory. They've been using the same lie for 10 years. But it seems like hard to put that all back into one piece. I just don't see how that happens. What do you think about that?
Yeah, yeah. No, I wish I had the answer. I don't think anyone has the answer, right? Like once the genie's out of the bottle, once you've passed the Rubicon, you pass the point of no return. There's kind of no turning back, right? And again, that's why I think it's really just important for investors to look for ways to kind of protect their wealth from rapidly rising inflation, et cetera. But yeah, bro, I have no idea how do you fix this. I think it's inevitable in my mind. I mean, the global economy is debt dependent. Central banks are just going to, regardless, continue to print, try to print their way out of this and inflate their way out of debt. And yeah, ultimately, that's going to hurt a lot of people, right? If you don't own real assets and if you're kind of working, trying to pay your bills and your bills keep rising and your wage isn't increasing, that's an unintended consequence, I think, of the system that we're in, fortunately. So ideally, look for ways to kind of invest in something that's going to increase higher than the rate of inflation. So you want to, identify those opportunities. And yeah, I think that's what your channel's educating people on. And, I think people should continue to listen to you and others out there and, make their own decisions, I guess.
Well, I love, actually, I think that's great advice. I mean, certainly if people are finding what I'm saying helpful, I appreciate that. Listen to other people, but at the end of the day, making your own decisions. And again, why I think what drew me to silver and how it ties in with my 10 years doing this, the people that I've met that actually understand even a fraction of what the Fed is doing, they're buying a lot of silver. And if 99% of the people, fine, they don't know what the Fed's doing, but if that's the real inflation hedge, and we're in a world where I don't know what Bitcoin's price is today, but 2016 it was $500. So at 40,000, that means you have an 80 bagger in the last 5 years, where here's silver at 50% of the 2011 high, 50% of the 1980 high. And John, I actually just read a couple books about what actually went down in 1980. And I had never, until then, I never really thought of this before. But when you look at what the fraudulent COMEX did back then, they kept raising margins. They were going to raise it. They went from 1,000 a contract up to 75,000 per contract. The guys are on the COMEX. They were short. They were getting their clock cleaned. So you could even make, or I will make the argument that were it not for the fraud back then, silver was heading past $50 in 1980. They had to cheat in this narrative of the Hunt brothers, according to Paul Sarnoff's Silver Bulls. Hunt brothers, they sat with their hands in the pockets the last couple of months while this all escalated. So a lot of fiction. And again, John, you mentioned earlier how we're set for these conditions of stagflation. I think stagflation, when did that become popular? In the 70s. And that's what led to this. People can say, oh, Hunt brothers, greedy guys cornered the market. That doesn't make it true. And it was the same reason people around the globe were buying silver. And if you look at what's been happening in the world, I mean, even gold's doubled its 1980 high. Are these the things that led you to silver, or what brought you to the point where you're doing what you are now today? is it a combination of all these, or how did you end up picking silver yourself?
Yeah, no, so I've been in the mining industry my entire career, so 17 years now. But I've worked in base metals. So I spent a number of years at Lundin Mining. They're, of course, a copper and zinc producer, but also on the gold and silver side as well. And so I was running another company. It was a junior exploration company, but we were looking to make acquisitions, and we were just looking for really acquiring high quality projects. So a bit agnostic. I mean, whether it was gold and silver or copper, I mean, all of those really have excellent fundamentals. But we came across this project that we have now in Argentina. Really liked what we saw. We spent, over 6 months doing due diligence and studying this carefully. We saw there was incredible exploration upside here. So we merged the company I was running with. Back then we were called Abra Plata. Now we've changed the name to Abra Silver. Took over as management back in January 2020, so about a year and a half ago now. And we've been busy proving out, and have had some excellent success so far, proving out that this deposit has significant exploration upside, come across with multiple high-grade intercepts here, and we'll be coming out with an updated resource statement next quarter in Q3. So, we were looking for high-quality projects, identified this one. Thankfully, it's silver. It's actually silver and gold, so entirely precious metals based. But yeah, no, we were just looking for high-quality projects, and thankfully came across this one. That's what brought me to be where I'm at today here.
Yeah, and I know the good silver projects not easy to find. And one thing that I think people find helpful, especially with a lot of new people coming into silver, on a spectrum of 0 to 1 to 10, with 0, you're out with your compass and a metal detector at the beach, and 10, you're in production. So people know what they're looking at. Where do you guys stand on that scale of exploration to production, so they get a better idea of that?
We're about a 7 or 8, I'd say. So we already have an economic study. So we already have a large deposit identified. So it's 140 million ounces of silver. There's been before we got involved, there was 40 million US, 40, spent on exploration here, and exploration going back to like the 1990s. So this is a proven deposit. There's clearly an economic project here, but we're coming out with an updated resource, an updated economic study, which is just around the corner in a few months here. We'll be announcing that. And then going straight to sort of the feasibility study level. And that's where you're kind of finalizing your engineering and all of that. And then within a few years, I mean, which may seem like a long ways away to some investors, but in mining, I mean, that's an extremely short period of time. If you're 2 years away from production, you're actually very, very close. So within a few years, I mean, we expect to make a construction decision. So by 2023, so less than 24 months from now, we expect this will be a project that's ready to be constructed and then ultimately enter production. So this is quite an advanced stage project relative to, there's exploration companies, like you mentioned, that haven't even made a discovery. I mean, they're 15 years away from ever coming into production. I mean, it's a long-term investment being in the mining space. And yeah, no, this is quite a well advanced project. We're a couple of years away from actually seeing this project commence construction and being built, and ultimately then it'll be a producing asset.
And is that the plan? Is it undecided, or do you know yet? Is it aiming to go to construction? Is it possible that there might be a bigger company looking for a deposit? Anything you can share there?
That's very possible. Is that this could be quite a could have targets on our backs here from some larger companies. So our goal is really, I mean, it sounds a bit cliche, but it's true. I mean, we're just looking to maximize shareholder value. The way we've gone about it so far is on continuing to focus on exploration and advancing the project at the same time, and that's really what we're going to do. So we have 2 years of runway ahead of us here, where we're focused on expanding this, growing the resource, and then getting permits in place, doing all the study work that shows this is an economic project. Then there'll come a point in time, likely in early 2023, where we'll need to make a decision and say, look, if somebody wants to pay full value for this asset, of course, we'll entertain those discussions. I have a lot of background, of sort of corporate development background. That's what I've done for most of my career. Or, I mean, we can look to bolt on a producing team that has significant expertise in developing assets and running operating companies, and then go down that path of actually building this ourselves. And just given the capex here, it costs about 300 million to build this project, which again might seem like a large amount, but relatively it's quite a doable project for a company, a smaller company to build on their own. So we'll have to cross that bridge when we get to it. But in the meantime, I mean, the focus is on adding value, increasing the share price, and then we'll ultimately make a trade-off study and figure out the ultimate path forward here.
Well, that makes sense. And another thing, I'd love to get your opinion on this, something I've been thinking about a bit lately, where certainly, you know, in terms of your risk spectrum, there's some benefit to, hey, the company, they built their mine, they're good, they're producing, you know what you have, you're earning money. Yet at the same time, and certainly there's room for diversification, maybe that's even the starting point. But if I was targeting, at least, you know, and everyone has their different assumptions, but if I'm of the school of thought that, you know, $27, $28 silver, we're going to see something much higher than that, what would you say about the degree where is it actually advantageous for a company that isn't in production yet? And if it's 3 or 4 years out, where, gee, I mean, if I find it hard to imagine 3 years from now, the price of silver below 50, let alone below, we'll leave out higher numbers than that. But what would you say to folks that they're thinking about which type of projects are right for them? Is that a good way of thinking about it, or what could you add there?
Yeah, no, I'd say the way we think about it is that we want to just continue to unlock value. And so we know that, you know, as larger companies look for acquisition opportunities, they're very often, if not in all cases, willing to pay a much higher premium for, you know, projects that are advanced and de-risked. So if you have your full permits in place, if you're construction ready, if you've drilled this off and you can prove, look, there's a, you know, a project here with a very high economic rate of return, companies could likely be in bidding wars for a project of that magnitude, because it's very scarce, right? Especially on the silver side. There are very, very few high quality primary silver projects out there globally today. There's probably about a handful or so that could come into production within the next 3 to 4 year window. And so I'd say, you know, what we're going to do is just continue to march the project forward. We're definitely not delaying anything. I mean, we're moving forward as quickly as possible. We'll likely look to, you know, get started on a feasibility study as quick as we can here. And then I think that's ultimately going to reward our shareholders as we continue to de-risk the project, move it forward, move it closer to a construction decision. And then, you know, ultimately we'll have to see who builds this and, you know, make those decisions at the right time.
That makes sense. And John, perhaps the last one before maybe you can just let folks know how to reach you with more questions or information. Based on where you are, all right, 7 out of 10 on the scale, what makes success or lack of success? What can go right? What are you preparing for to make sure that you get to that finish line?
Yeah. So I'd say one of the benefits is that we already have a highly economic project. So it's already significantly de-risked from that stage. It's not like we're exploring, trying to find a project. We already have a highly economic project. I think at current commodity prices and based on the existing resource, this project has over a 50% internal rate of return, over a $730 million Canadian net present value. So this is clearly an economic project. And as I mentioned, the cash costs are projected to be in the lowest quartile. So this project will be producing silver at $7.50 an ounce. So very high margins. And so, you know, our goal is just to continue to advance that, continue to grow that, make it even more economic, make it even more compelling, and move that closer to the finish line. So from a, you know, risk reward perspective, it's quite an asymmetric payoff here, given that, you know, on the downside, I mean, we already have an economic project. So, and it's already economic not only at current prices, but even at $20 silver long term. This has a 30% rate of return. So it's quite, you know, on the defensive side of things, it's quite a defensive project. because you're not dependent on $50 silver to make it work. It's very economic already at lower commodity prices. But yeah, in terms of the reward, the upside potential, the leverage is just phenomenal. I mean, I think it was at double the current silver price. So yeah, I guess $50+ silver and $3,800 gold. I think the net asset value here of this project is about $5 per share. We're currently trading at 60 cents a share. So if commodity prices double, I mean, there's a incredible torque here on the upside. And so, I think that's a risk reward profile that we're very happy to have in our favor here.
Yeah, and John, in honor of that margin you just described there, I'm going to apply, I'm coining a new phrase right for this special episode. Your margins are big enough to overcome the Bernanke effect, as I will now call it going forward. So even if these guys do hyperinflate for a little while longer, well, you get the full Nelson Benham tamp down on the price. Seems like you're in position to overcome that. Although, again, I don't want to overstep the CFTC's bounds and keeping investors safe. I could be completely, studying silver in a Keynesian world. But John, so people don't have to take my word for it, if they want to have their financial planner call, or if they want more information to find out whether it's a good fit for what they're looking for, how do they get their questions answered? How do they get more info?
Yeah, no, you can email me directly. So my contact details are on the web page there, but it's quite easy. It's John. You can just email me directly, john@abrasilver.com, and you can see the numbers there as well. So you can use that info line, which goes to me, or just my direct email address. So I'm always happy to take any investor questions and get back as quickly as possible.
John, maybe we, after you guys go into production, or if it gets bought out, you could take over the CFTC, because you're the way you approach things and handle them. Only imagine what it would be like there. But that's what I love about it's so different from my time on Wall Street, where they all act like the CFTC and Goldman. And I don't know many other industries where you can actually call people, speak with the people running the company, get your questions answered, and it's almost foreign. Serving the customers and the shareholders and the stakeholders. So I appreciate the way you go about things. It's great to hear how you've put yourself in position for success there, and we'll look forward to following your journey going forward.
Thanks very much. And I'm always happy to come back anytime and provide your viewers with an update. And thanks for all the work you're doing for the silver price and for the silver market in general. It's much appreciated. So I'm sure it's a lot of hard work going in. I've read your letters that you've issued to the CFTC, and it's great that you're helping bring things to light.
Well, it's actually a lot of fun writing those. Sometimes it takes a little while, but maybe if you make it down for Silverfest 2 this Halloween week in Mexico, you could see me type away. It's like sometimes I'll just sit there giggling, and then it'll just hit me. It's like, oh wait, I could phrase this so it'll be like a little more subtle, jab at the establishment. So all good fun. We'll look forward to catching up with you again soon. And thanks again for joining me here today, John.
Thank you. Thanks for having me.